For someone that's just starting out in real estate investing, some of the most important first steps, because there's a lot of different ways that you can do it. You can get into investing as a primary. You could get like a FHA loan on a fourplex and get a 203K loan to finance the repairs in it and live in one and rent the other three out. That's kind of a way of doing really hands-on primary residence investing. You can do flips. But I would say some of the most important things to know when you're starting out, or most important things to do, have some cash on hand. It's a difficult thing to do to get into this game with no skin in the game. You can do it, but it's going to make it easier on you if you have some of your own cash to spend. It's going to make your monthly payments on whatever you're doing lower. It might have it'll create a little bit of a buffer zone for you. And I would say like another big one is, don't be afraid to go out and try and find some money. If you have a good deal, whether it be a flip or a rental or multifamily or commercial or whatever it is that you're doing, when you're starting out, you're afraid to go raise capital. People with money want to get in on good deals that are going to have a pretty solid return on their investment. And, it's by giving people like you money to do them, that's how they get more money. I mean, it's a financial play doing these kinds of investments. So, if you have a rock solid deal that's looking like you can make some great margins, but you don't have the capital for it, finding the capital is the easy part. So I think if I could give you one, I think don't be afraid to go ask people for money. Ask your uncle, ask your boss, start calling hard money lenders. You might end up with some better financing terms than you think you would, or pool some money together with some friends. I mean, you can do a lot with a little, but you're going to need some cash. So don't be afraid to get your hands dirty and go out there and try and find some money to get started. Sacramento is considered a good place for real estate investment because we have a lot of different types of communities, I would say. There's many reasons it's a good place for real estate investment, but we do have a lot of different types of communities. If you want to do more entry level, maybe in the $400,000 to $600,000 range, there's a spot for that. If you want to do mid-level, maybe $600,000 to $1 million, there's a spot for that. If you want to do multi-million-dollar developments, there's a spot for that. If you want to build an apartment complex or things like that, there's places for that in our general region. There's also a lot of money flowing around here. We have politicians, we have business people, we have a lot of real estate investors around here. It's an affluent community. There's people that are willing to do deals. You can definitely find partnerships and like-minded individuals and investors that might be interested in your types of projects. And also, I mean, our real estate in California in general is pretty brisk. It's a healthy market. California real estate just tends to do pretty well. And when real estate does well, your margins are going to get better. You're going to make more on the back end, or your rents are going to go higher. When prices go up, rents go up with them. So it's a good place for real estate because there's a lot of opportunity, and it's pretty consistently, it's done pretty well. The most common investment strategies I'm seeing succeed in the Sacramento area. There's a few. I would say the fix and flip is a good one. Fix and flips are a little bit more difficult these days because prices are a little inflated in 2025. So when you're buying on the front end for more money, yes, you're probably selling on the back end for more money, but it also raises your monthly payments because you're paying interest on all these things. So the fix and flip is a good one, a little bit more difficult to do these days, also because competition's really high. The buy and hold rental is a great option. If you can get into a rental with enough money down, or maybe a 1031 exchange to where you're making money on your rent month over month, buying and holding in California is usually a pretty solid play. So if you're in something that's making you money on a monthly basis and you just keep it, that's a pretty solid investment play if you can get to that point. Development is a little bit more of an advanced investment play around here, but that's where a lot of the great money is, whether you're developing raw land into something that can be built on, or you're doing ground-up development for maybe entry-level properties, luxury properties, multifamily, or commercial. Development is a very high ROI play, but it takes a lot of upfront capital and it's a long-term play. But one of the ones that I'm seeing people get into a lot is the primary, I own and live in the house kind of investment. There's a lot of cool, tricky, niche little loan types of programs. Maybe you get some government funding, or you get a grant, or you get some sort of special loan program like a 203K, FHA first-time home buyers, only 3.5% down. And you can get fourplexes with these places. You can get into a fourplex with 3.5% down, finance your repairs with a 203K loan. You're paying off most of your monthly nut with the other 3 that you're not living in. You're essentially living for free in 1, and then you just keep that property for the long term. So a few different investment vehicles. There are a lot of them in real estate, but those are probably the big 4. How do I analyze a potential investment deal? What are some key numbers that you need to know? The key numbers that you need to know are going to be, how much cash do you have on hand to put into this project? What's your skin in the game going to be? What are you going to be paying in interest? So how much is going to be coming out of your pocket on a monthly basis? If you're doing a flip, what's your ARV, your after repaired value on this project? Capitalization rate is going to be an important one. It depends on what kind of investment vehicle you're going to get into, but I'll say the blanket for pretty much all of them is, how much money is in my pocket that I'm willing to put into this thing, and what am I going to be borrowing? What percentage am I going to be borrowing money at? Because you're probably going to be borrowing a significant amount of money. And then just, what's my return on investment? How long is this project going to take me? So how many months am I going to have to pay this percentage in interest? It's a quick little easy equation, but it's really about, how much money do I have today? How much money am I going to borrow? How long is this thing going to take? And what's my percentage return on investment going to be once it's all over? It's different if you're flipping, or if you're buying and holding, or if you're doing development, or if you're doing multifamily or commercial. But you got to understand where you're at today before you can understand where you want to go, because where you're at today is going to determine what's feasible for you, and the things that are feasible for you is going to put you where you want to go. It's a little bit tricky, but just understand your financial situation starting, and that will help you a lot. The biggest risks or mistakes to watch out for as a new investor. It might be a contrary answer, but I would say jumping into something maybe a little bit too early, or jumping into something without all the information, or diving into something that you're not 100% comfortable with. There's always going to be another deal down the road. I don't care if the market is up, down, sideways, upside down, whatever's going on. If you're in a position where you are ready to make a leap into a significant investment, and you're not really feeling this one that's been put on a silver platter in front of you, don't do it. Wait until you can get into one that you're feeling, that you feel like you can make money on, that you can be happy and enthusiastic about, that you feel like there's enough cushion on. That's a big one. Make sure that you have enough buffer for things to go wrong, because they will. So just make sure that you're confident in this investment that you're making, because there's always going to be another one down the road. As you continue to move through this game of real estate investing and working around in the real estate space, you'll start to realize that things are going to come across your plate. You're going to meet people. Everybody needs money, or everybody wants to get into something, or everybody has a cousin that has a thing. There's going to be a lot of opportunity for you. So make sure the one that you're taking when you're first starting out is going to be a successful one, because it's really hard to lick your wounds back to health when the first project is a bad project. You want to have a good first project, and it's going to set you in the right direction. You're going to learn a lot either way, but the first one, you better have more money than when you started. So make sure the first one's a good one.